Good afternoon, traders and investors. Will back here with another one, coming to with a Monday market recap. Hope everybody had a very good weekend and a great start to the week in trading. Now, in terms of what happened in today's markets, guys, well, to be honest with you, not much. It was a very mixed session across the board. Roughly half the names on the S&P 500 were up and half of them were down. We also didn't receive any economic or macro data today whatsoever. As a matter of fact, the only piece of data that we're going to get all week is going to be tomorrow, and that will be retail sales. Now, obviously, we know that retail sales have been slowing down over the past 3-4 months as consumers deal with higher and higher prices, right? However, tomorrow we'll get an indication of whether or not that trend is maybe coming to a cyclical bottom or whether or not it's getting significantly worse. So this should be a very interesting data set to be on the lookout for tomorrow. But as a whole, guys, very mixed session on the day today. And as I said, largely due to the fact that we're just embarking on a big earnings season. A lot of major names reporting all across every single sector in the week. So largely a case of the markets maybe just waiting in anticipation of Tuesday through the Friday session. So in today's video, guys, we're going to do a couple things together. Number one, I have prepared an earnings report, and that is going to be going over BlackRock. BlackRock reported earnings this morning before the open, along with Goldman Sachs. So we'll be taking a look at BlackRock, as I don't really mention it that often, but it is an extremely solid company. Thereafter, we'll take a look at our major technical analysis rundown in terms of our major market indexes, and then our big tech names, and see if there's any good deals to be had in the market right now. And lastly, take a look at my portfolio to see which trades I put on to start the week. So without further ado, guys, a lot to talk about today. Let's get right into it. SPY up about 0.28% on the day. Decent day for the SPY. QQQ pretty much matched with that, 0.27 to the upside. But across the board, guys, very mixed, right? You can see this right here. As a matter of fact, let me just pull up the number of names up, 281, and number of names down, 222. So very mixed day on the market, even amongst big tech, right? Very mixed and choppy day. Apple, Google, Tesla having some decent days. Tesla, however, was up 5% at one point before retracing most of its gains. And then we had Meta, Amazon, and NVIDIA continuing ever so slight declines. Where the highlights were, guys, were definitely in the banking sector. Take a look down here at your financials. Credit cards back up nicely, and most of your major banks were outperforming. Berkshire going on a heck of a tear as well, so I'm very happy that I presented that swing trade at the opportune moment all the way down here, and that would have been a very juicy, guys, almost 7-8% gain after literally months and months of consolidation. This trade was ready, and nice to see us getting some final follow-through, so hopefully people were able to make a bit of profits on that. But in terms of the rest of the market, guys, very mixed day. Now, in terms of the one-day performance on the group chart, you can see that even better, really mixed across the board, right? We had some good gains: financial, energy, industrial, real estate, communication services, which is basically Google and Meta, and technology. But to the downside, healthcare retracing after their last week's gains. Basic material, consumer cyclicals proved to be still a little bit down in the mud. Consumer defensives as well, and utilities really taking a major hit, even though interest rates didn't really spike up that high today. Utilities, for some reason, just taking a little bit of a pullback. I mean, utilities has been doing fairly good over the last week of trading. So now just a little point of a pullback into maybe further daily uptrend continuation. So no red flags across the market as I can see it as a whole, guys. Now, before we get into more technical analysis, let's take a look at our only earnings play that we have prepared for the day. And that is going to be BlackRock. Legendary company, guys. Obviously, you guys know what BlackRock does, right? They own, they're the largest ETF manager in the world. They own every single iShares product that you may have in your portfolio as well. So it's a very easy business for them to run, right? All they do is put together ETFs. Clients and institutions put their money into ETFs, and all they do is generate fees, which is why they have amazing net margins here, guys. $10.5 trillion in assets under management, the largest ETF provider in the entire world. Amazing net margins. Take a look. I'll move myself over here, guys. Look at these net margins on a yearly basis, right? Anywhere between 25 to 30% net margins. They generate a ton of cash, a ton of free cash flow. And what do they do with all that cash? Well, they use it to buy back shares aggressively, which really leads to boosting EPS. And they also pay a decent little dividend too, guys, about a 2.5% dividend. That is very good. So in terms of their earnings, guys, what happened for their earnings? Well, it was a very nice earnings session for them. They missed ever so slightly on revenue by about 1%, but their EPS gains largely made up for that. A nice increase, 4% in their EPS. That's really never been a problem for them, guys. consistent and predictable company is what we look for. Look at this gorgeous EPS expansion. Obviously, there was a little bit of contraction in 2022 and 2023. Why? Because people exited the markets. They got out of ETFs and into money market funds and into fixed income products, right? But now as people come out, the rotation out of fixed income, because interest rates are obviously going to come down. So you will no longer be able to get 5.5% on your fixed income products, such as guaranteed deposit certificates, right? Or even money market funds that pay 4.5%, 5% right now. Obviously, when rates come down, well, those will pay less and less, and people will have to pivot their money from there into equities, which is why we're going to see a nice appreciation curve on the EPS. And revenue is just always pretty much going up for BlackRock, so really no problem there. They really own a ton of different ETFs, whether that's the money market funds and the fixed income, which they make a little bit less money on, and then they have the majority of their business, which is the equities ETF business, right, for stocks pretty much. So in terms of their earnings, guys, we're going to go through these a little bit quickly, just because I want to cut down on the time of the video. So when we go through earnings this week as a whole, I only really want to spend 5-6 minutes per company, as opposed to my traditional like 10-12 minutes per company, right? But I'll still try to give a very good overview and direction of whether or not the company is moving in the right direction or the wrong direction, right? So take a look at this, guys. Now, $82 billion of quarterly total net inflows, positive across all product types. That was for their quarter. Very, very good. 10.6 trillion in assets under management. That's up 1.2 trillion year over year. Obviously, last year was a good year for equities, but still a lot of people on the sidelines, right? Now, a lot of more people pouring back into markets. So we had a 10% uptick in assets under management. Very good. 8% increase in revenue. Here's what the CEO had to say about this. I apologize if it's a bit too pale. Let me try to do a better job of highlighting this right here. So BlackRock generated nearly $140 billion of total net inflows in the first half of 2024, including the $82 billion in this quarter, which is 3% organic base fee growth for the company. So think about their management fees that they make, right? Organic growth was driven by private markets, retail active fixed income, as we were saying, right? Money market funds and those bond ETFs, and surging flows into our ETFs, the equity versions, which had their best start to a year on record. We are delivering growth with scale, reflected in a 12% increase to operating income and 160 basis points of margin expansion. A very, very good quarter for them here, guys. If you don't know exactly how their revenue mix is broken down, just head over to TradingView, click the revenue tab up here, and you'll see most, if not all of their money, guys, is from their ETF business, right? Yes, they have other businesses like data services, distribution, right? Advisory performance fees, other things like that, but it's such a small portion of the business. The big blue portion is their ETFs, which is, arguably between 85 and 90% of their entire business. So when they say that they're getting margin expansion and ETF inflows, that is what's most going to affect their business. Take a look at some of these slides from their earnings. What I wanted to highlight is the growth of their ETF business. These numbers are on a year-over-year basis, but looking quarter-over-quarter, right? So when it says Q2 2024 here, we're measuring against Q2 2023. And as you can see, guys, just organic revenue growth across the whole long-term organic asset growth rate of about 8%, which is very, very, very solid for the company. Operating margin now coming back into expansion as people pour back in to ETFs and equities as a whole. And you can see also that net income curve is just absolutely beautiful, continuously generating more and more profits, which translates into more and more EPS. In terms of the rest of the things about the company, right? This is their free cash flow on a yearly basis, just because TradingView doesn't show it. So you can see since 2009, this company has no problem expanding their free cash flow. The slight decline here from 2021 to 2023, obviously we've explained before in the last couple of minutes, guys, just because people were pulling out of ETFs, sitting into cash, or maybe pivoting into money market funds, savings accounts, stuff like that. And BlackRock makes less money on those products than they do from their ETF, their equities divisions of the ETFs, right? Very, very solid company as a whole here, guys. And in terms of the technicals, I really like this one as well. Take a look, guys, monthly uptrend in motion right now, just rejecting from the previous support zone right here, but that's between pretty much 788 and 753. Juicy little buying opportunity, even up here, guys, for a little bit of continuation back into the all-time highs. I see no reason that this one would be a bad trade whatsoever. As a matter of fact, it's looking pretty good, and I may take this one myself for a little bit of a swing. Revenue and EPS for the next couple of years growing healthily, guys, but this is more of a value company. Don't expect to see double-digit growth here, right? More of a value-oriented company. Gives them a forward PE for 2024 of about 19.85. That's not all that bad, guys. That's in line with pretty much their last 3-4 years of historical average. You can see it varies anywhere between, 18 to roughly 20 is going to be pretty much the average point since roughly the 2020 period. So really in line with their previous valuations. I don't really think that they're overvalued or undervalued. I think the company is actually fairly valued. So it's not at a tremendous discount, but it's also not tremendously expensive. The reason I like it, decent free cash flow yield, anything between 3 to 5% is good. When you start to see it in the twos, it's a little bit tight, guys. It's a little bit tight. It means the equity has ran a lot and the valuation is not too good. So in terms of these guys, we really focus on free cash flow yield, especially when it's concerned with a company that pays a decent dividend and that isn't growing so fast. You really want to take a look at your free cash flow yield over and above something like a PEG ratio, which is more applicable to companies that are growing EPS double digits per year. Now, in terms of their balance sheet, very, very healthy, guys. More, slightly more debt rather than they do have cash. But I mean, the numbers are very, very close. They generate between 3.8 and 4 billion in free cash flow per year. So that is really not a problem for them. So very, very interesting balance sheet. Nothing bad to say about the company whatsoever. And in terms of the valuation, guys, I truly think it's fairly valued right now. As I said, not cheap, not too expensive. Could just be looking for a little bit of expansion right here with the rest of the markets. And take a look at this. It's lagging the S&P quite considerably, right? The S&P 500 this year is up about 17%, let's give or take, year to date. And BlackRock is only up 2.34%. So I do think that they can catch up. Usually they are one of the index outperformers. So to see them lag behind by such a wide margin just leads me to believe that they will be playing a little bit of a catch up. As a matter of fact, a lot of their sector peers have already ran significantly, right? Moody's Corporation has already ran to its all-time highs. SPGI has already ran to its all-time highs. The other direct ETF provider, that's their more direct competition, MSCI, is still low as well. So I do think that this one and BlackRock have a good chance to catch up to the S&P 500's returns. So I may be interested in taking a little bit of a swing trade from here. And if we have a little bit of a dip, guys, a little bit of a dip more after their earnings down into maybe the 810, 800 region, that's where I may be adding a little bit more shares. So I'll probably be adding over the next few days if you do get a nice little dip back into this pocket right here. And this one is not a tech stock, guys. Don't expect it to move extremely quickly. Just a very solid company, solid fundamentals, amazing net margins, amazing expansion for revenue and EPS, and just one that just consistently grinds higher year over year. Yes, we have some corrections when the market has corrections, obviously, but in this bull market right now, I see no problem with BlackRock whatsoever. So that's just a quick analysis on BlackRock. Hopefully you guys appreciated that. Now, let's jump into our ETFs right away, guys, or rather our technical analysis on our major stock market indexes. And give me a quick second. And we'll get right into it. So SPY, what are we looking for here on SPY, guys? Well, SPY is looking very, very healthy. Obviously, guys, a lot of the price action this week will be a byproduct of how well earnings go for a lot of big companies. Morgan Stanley, United Health, which is their largest player in the healthcare sector right now, Bank of America tomorrow, Charles Schwab, then we have ASML, Johnson & Johnson, Ally Financial, right? A lot of very big companies reporting this week. TSMC, Netflix, obviously on Thursday, American Express on Friday, Domino's, DR Horton. So a lot of very big companies will be reporting this week, and that's going to give us a sense of how this earnings season may unfold. So what we're going to be looking for on SPY in terms of the technicals, yes, we are in a nice daily uptrend right now, but be wary, guys. If for ever which reason we lose this hourly trend into tomorrow and break today's low, 559.74, well, your daily consolidation will start already, and then we need to keep a close watch on 556.08, right? So the bulls can just continue this uptrend a little bit higher, but if we come down and break this low, you will lose the daily uptrend and open the doors to set up for the bears to set up higher low, lower high, into lower low, which would be daily downtrend and a little bit of weekly consolidation. And as I've been saying in the last couple of weeks, guys, anything above 520, just looking for a weekly higher low for further continuation. Nice confluence right here, the 12 EMA and this whole section of prior daily resistance, which will now be support for your bulls for at least a first touch. So really no red flags on the market as a whole right now, but as I said, could be a little bit volatile coming into the tail end of the week, especially with so many large corporations that will be reporting. Moving on to the QQQs right now, QQQs also not looking too bad, 0.27% to the upside. Same analysis as the SPY. They are in a gorgeous daily uptrend right now. The daily higher low is set right here, 490.28 with this low right here. What we'll be watching for on the QQQs is, can they continue this daily uptrend over the course of the week, or will we just maybe set lower high with today and then flush this level right here? That would be lower low. That would be daily downtrend, which would start a little bit of weekly consolidation for the Qs. Now, keep in mind, guys, QQQs do have a decent amount of space, talking anything pretty much above 473.57, looking for the weekly higher low in the event that this week proves to be a bit more red than expected. Just understand that your bulls do have a decent amount of space here above that 474 to maybe set a weekly higher low and maybe go for another weekly leg higher. So all in all, no red flags as of yet, but we will keep each other posted on a day-to-day basis. Moving on to XLF right now. XLF new all-time highs, looking excessively gorgeous here, guys. Daily uptrend very healthily in motion right now. Just be wary. Daily is approaching some overbought conditions. The hourly is in overbought conditions, and the 4-hour as well is in heavily overbought conditions at about 80, right? This is not NVIDIA. Usually financials don't hit 80 on the 4-hour RSI that often. So if ever we get a little bit of rotation, let's say after the rest of your bank earnings are out after tomorrow, if we have one more maybe green day, if the rest of the banks report good, then we may just be due for a little bit of a pullback. And where could we pull back here, guys? Well, you guys know this is one of my favorite trades of all time, pretty much. Daily uptrend, break out of the all-time high, and then if ever we consolidate towards the all-time high, that is known as the retest trade. So breakout, retest, and maybe run for financials could be an interesting little swing trade for the ETF as a whole. On the weekly, guys, weekly is looking very good, right? Weekly downtrend was here, 100% engulfing move, and now the bulls are back in control. So at any point, guys, if we lose the daily uptrend into a daily downtrend up there, let's say, tons of space for the weekly, guys. Anything above 40.4, just gonna be looking for a weekly higher low for continuation of the weekly uptrend. No red flags. Moving on to healthcare right now. Healthcare pulling back after a beautiful 6 days of rally in a row. Really doing a good job here, guys, of just destroying this daily downtrend that the bears had in one single move. Big engulfing move by the bulls. Now it's up to them to set the daily higher low and continue this trend. Where could we maybe set the daily higher low? We'll take a look at this region right here, right in this green rectangle that I have drawn. Previous all-time high, that is your resistance area. We broke above it right now. We may be testing the lower end of it as support for a potential breakout, retest, and maybe run past the all-time highs. Looking quite good in terms of a technical setup, if I do say so myself, right? So that's pretty much everything for the daily. Anything above 142.80, just looking for that daily higher low for the continuation of the uptrend. So tons of space for your bulls right now. On the weekly, weekly is looking very good. We finally have our third weekly leg of trend expansion. So looking to just push this into continuation over the course of the month of July. No red flags in healthcare. As a matter of fact, healthcare looks poised for a continuation rally past the all-time highs. Moving into semiconductors right now. Semiconductors, very mixed day, right? Some names were up, some names were down. No clear direction. This index was actually down for the day. So what we're on the watch for on semiconductors is the same as the QQQs, right? Nice daily uptrend, higher low is set. We're looking for that trend continuation. However, be careful. The higher low is right here, 270. If for ever which reason, guys, into tomorrow, we continue this hourly downtrend into further daily consolidation and break this low right here, that would be an official daily downtrend, and we will be in for some official weekly consolidation. All that, however, is very healthy for the bulls. Why? Because they've created a lot of space on the weekly here, guys. Anything above 255.56, looking for that weekly higher low for continuation of the uptrend. I would keep a very close watch on this level right here if ever that scenario does play out. Keep an eye here, guys, on that 264 line, right? It was a very nice area of resistance. Could be acting as a first touch of support for the bulls, and the 26 EMA is right there. This index, guys, is going to be predicated on the success or failure of ASML and TSMC's earnings, two of the biggest companies in the game in semiconductors right now. So that's pretty much everything for them. Now, moving on to the Russell. Now, the Russell, guys, this one, I will admit, has completely ran away from me, right? I got a little bit maybe too greedy trying to go for levels down here, right? 197 all the way down to about 193. That's where I wanted to pick up the Russell myself personally. But unfortunately, in just 3 short days, it has now run a ton out of this breakout zone, almost 7%. And it's an ETF, guys, right? Usually they don't run like this. So fantastic performance. Happy for anybody who had the chance to actually pick up some Russell, who took the gamble on it. Now you are heavily rewarded, looking very good. So obviously massive daily uptrend is in motion right now, slightly overbought on the daily, not egregiously overbought. However, on the 4 hours, yes. So could we get maybe a little bit of sideways consolidation and a final push into the daily? Absolutely, guys. Keep a close eye on your 1 hour time frame as usual. The most important one, because as soon as we start losing this hourly time frame, you will know that your daily move higher is done, and we might be just in for a little bit of daily consolidation, right? So where can we look for some daily consolidation? Well, that yellow line is a pretty good one. Previous support, big resistance here for a very long time. Now the infamous breakout trade is amongst us once more. Weekly gorgeous uptrend. If for ever which reason this move tops out and we set a daily downtrend coming down into this area right here, that is going to be a juicy trade here, guys. 211 down to 207. Breakout, retest of the range and run. This is going to be a likely scenario where I'm going to be looking to play the Russell for that high probability trade. So looking very, very good. But as I said, I'm going to be a bit more patient with this one, waiting for the confirmation retest because of the higher time frames that we're looking to expand into pretty much after that, the all-time high area. So it could be interesting. Monthly expansion looking very good right now. And now lastly, the Dow Jones. So the Dow Jones, 0.53% to the upside. That is a new all-time high for the Dow Jones, looking excessively strong. No red flags whatsoever, right? Let me delete these lines because they're giving me anxiety right now, right? They're not very properly drawn, so let me just actually draw straight lines for you guys. So that being said, guys, Dow Jones really doing a good job of breaking over and above your prior all-time highs, right? We've really put in some space between the higher lows. So nice daily uptrend in motion for the Dow Jones. If we do choose to pull back right here, anything above 39,141, just gonna be looking for a daily higher low for potential further trend continuation, right? So first line of defense is gonna be the all-time highs. We don't have that much of buffer above them right now, but it is definitely gonna be a first line of defense for your bulls, talking about that roughly 39,950. Now, in the event the markets have a little bit further of a pullback, because there's a lot of names of the Dow Jones that are reporting this week, UNH is going to be the biggest one. They have a lot of weight in the Dow Jones just because of their share price, right? So we're going to keep a close eye on the Dow Jones, but if ever we do have a larger than expected pullback, let's see if we get a daily downtrend with the rest of the markets into the week, another decent level of support down here, and that will just be looking for the eventual weekly higher low for the eventual trend continuation. Same principle, right? Gorgeous weekly uptrend, looking for the weekly higher lows, and then run. This area of confluence appears very, very strong. And once again, that's 39.6 down to about 39.4. So looking pretty good if we retest that area for some continuation. Now, moving on to crypto, because crypto's had a heck of a move today here, guys, right? A bit of rumors about the ETF approval for Ethereum coming through either tomorrow through Thursday. So a lot of renewed bullishness in crypto as a whole. And I was saying all the way back here, guys, tremendous opportunity to buy the dip. And we bought the dip hard, and now we reap the benefits, right? So looking very good. Daily uptrend back in motion clearly for the bulls right now, looking excessively good. When this move is topped out, and it doesn't appear close to being topped out, guys, on the daily, nowhere close to being in overbought conditions. The bulls with tons of space. I would like to see them break 66,000. Give me a break of 66,000, then sit on it, and then maybe attack the all-time highs. Could be a scenario in which that we could get a nice breakout retest trade attempt for the bulls right there. On the weekly is also looking very good. So weekly downtrend was underway, and now the bulls have created a lot of space with this bounce. Take a look at the size of the bounce on the weekly, guys. 61.8. We have a 618 retracement, which gives the bulls the best chance that whenever this move tops out, we can get a weekly higher low into a renewed uptrend. So the bulls looking very, very good with this move right here. I would not be surprised as now the market's broadened out. You've seen the risk on trade, right? I was telling you guys how correlated the Russell and Bitcoin have been. And look in the past 2 weeks what happens on both of those assets, right? Both of them have now put in substantial moves from the areas that they were consolidating in. So looking very, very strong for some continuation on Bitcoin. And we were never really in jeopardy of losing the longer term timeframes, right? It was looking very, very good. Tight monthly consolidation at the top for some eventual trend continuation. As I said, my target on Bitcoin for the end of 2025 is about $120,000. That's just my personal price target. However, looking very good on the trend right now. Moving into Ethereum. Ethereum also with a very monstrous move. Daily uptrend back underway for the bulls right now, completely engulfing this most recent move down by the bears. Looking very, very strong as soon as we do choose to pull back. And Ethereum does have a lot of space on the daily before it's overbought to continue running essentially, right? So next area of resistance that we're going to be looking at, guys, is 3,600. So let's say we run it to 36 and encounter a little bit of resistance, maybe pulling back into this location right about here and maybe run a little bit further for Ethereum. Looking very, very good, even for long-term prospects for Ethereum. In terms of the weekly, well, the weekly pretty much double bottom right here, and now we're looking for the size of the bounce. The size of the bounce right now, guys, is pretty good. Almost the 618 for the bulls. Would like to see them get a little bit higher just to maybe guarantee the probabilities of resetting this into a new weekly uptrend. And the monthly, guys, the monthly was always looking good on Ethereum as well, right? Tight consolidation range like Bitcoin, looking for that trend expansion when risk on trades were more favorable. And now they're starting to become more favorable. So Ethereum looking to run again. Congratulations to everybody who bought the dips down here on Ethereum with me. Now, moving on to our big tech names, shall we? So Apple, looking good on Apple here today, 1.67%, setting another record all-time high right right now is Apple, looking very, very strong here, guys. Nothing bad to say. As I was saying, I'm so positive right now that Apple is going to be able to hit 250 at a certain point this year. They're almost there, right? And that would be crazy. That would be almost a $90 move from the lows just about over a month or 2 months ago right now. So crazy movement on Apple. Congratulations to everybody who's been in this one. I have some in my long-term portfolio. I just don't have any swing trades on Apple right now, right? So congratulations to everybody who has both swing trades and long-term investments in Apple. Such a great company. In terms of the daily trend, guys, daily trend expansion clear as day right now. Still teetering in overbought conditions. Little bit of divergence, right? Bearish divergence where we're putting in higher highs, but the RSI is putting in lower lows. So be careful, guys. You know, we might be in for a little bit of weekly pullback and shortly, right? Apple is due for a little bit of weekly pullback. The weekly is kind of getting a little overbought right now on Apple, and Apple is not NVIDIA or Tesla, right? Usually it doesn't stay overbought for that tremendous, for that long, right? So for tremendous amounts of time. So daily uptrend is nice. Keep a close eye on this one right here, 226.03. As soon as this move is topped out, how do you know the move is topped out? Watch the hourly. If we lose the hourly trend in a significant fashion, you will know that daily consolidation is officially underway. Then we take a close eye on 226. For every which reason, guys, we lose 226, set the lower high into lower low, daily downtrend, just a little bit of healthy weekly consolidation on Apple, in my humble opinion. And the closest area of support for the bulls is going to be down here at about 217, 218. So a little bit of a scenario like this, if ever the markets choose to consolidate big tech a little bit more before their earnings, could see Apple pull back into this area right there. 217 would be where I would be more interested in playing the stock myself. Moving on to Amazon or AMD right now. Give me a quick second. AMD, man. AMD is looking so good for some swing trades right now. So obviously we're getting continuously rejected at the 185, but you'll understand what I mean by swing trades. This is looking so good. The 185 is big resistance from the past that we know. However, there's a nice area below us here, guys. This is once again the same trade. Breakout of a range of consolidation, resistance range, retest potentially the lower area, and run. So if we can't get through this 185 right now, and we have to continuously pull back on the daily into this level, you can see losing the hourly a little bit, right? If this continues into the rest of the week and we start retesting some of these levels right here, 174 down to about 170, right? This is going to be such a juicy swing trade opportunity, in my opinion, leading into their earnings. And also keep in mind, they are releasing their Ryzen 9000 series of CPUs. Still haven't been released yet. They have been, the performance of them have been leaked, but still no official release by the company with official benchmark numbers. Those are the ones we're looking for, but supposedly they're just as fast as the Intel ones and use half of the power. So very efficient. Looking forward to that news release. So AMD, as part of this pullback strategy here, guys, on the weekly, it looks even better, right? Weekly uptrend, encountering some resistance. If we pull back, weekly higher low right here, the 12 EMA, let me just zoom in on this chart so it makes sense to everybody, right? Because I really like this one. Now, zoom in, the 12 EMA is right here. So if we do get a little bit of a retest right here on the 12 EMA as well, 174, 170, I will probably be trading it swing trade style, either shares or calls, maybe with a little bit of time, 2-3 months on them, and looking to hold them through earnings. I really think this one has a good chance of expanding back into the 190 and 200 level as well. So looking very healthy on AMD. And even for short puts, guys, in yesterday's top 5 videos, we were looking for short puts down here. They were open today. If we continue consolidating throughout the week, I will probably go a little bit heavier, maybe go with maybe 2-3 weeks of time at the 170s, 168s. And when we do get that bounce, all that premium is going to come out of these contracts. I'll be able to close them early. So just a few swing trade ideas on AMD, but I like this one looking pretty solid. On to Amazon right now. Amazon as well, guys, putting on the exact trade that we're maybe looking for right now, right? So Amazon was in the context of a very nice daily uptrend. However, now they have lost it, right? So daily downtrend is underway for Amazon. The bears are in short-term control. What are we looking for? Looking for the retest of the all-time highs. Gorgeous weekly uptrend right now. Breakout, retest of this level right here. The weekly 12 EMA is sitting right here. Could be ripe for a little bit of a breakout retest trade swing entry. Looking very good. I already have a position on Amazon as of today. I did write some short puts at the 190, getting a little bit more aggressive with it. And they do have earnings here coming up Thursday, the 25th of July. I think they're going to smash it out of the park here, guys, especially when in terms of net margins and free cash flows. Those are going to be the focus of Amazon's business this year. They've never done that in the history of the company. They've always traditionally focused on top line revenue growth at all costs, not so much focusing on net margins. Now they're focusing on net margins and free cash flow expansion. They're going to absolutely crush it. So looking very strong in terms of that pattern right? Continuous weekly uptrend right now, just looking for the retest of the 190 level before maybe running a little bit more. So I would not be even opposed to making a short-term swing on this, maybe with a little bit of call options, 2-3 months worth of time on them. We're not looking to hold them for 2-3 months, but we just don't want to get screwed with time decay in the event we consolidate and then only after earnings, right? In about, let's call it 2 weeks time, we then start to finally rally, right? So not going to go too close with the calls if I do choose them, but that is the trade style on Amazon, looking very, very strong. Moving on to Google right now. Google also, up about 0.75% today and up a lot more in the after hours. Not too sure what happened in the after hours. A lot of companies are up significantly. Maybe there's some news that I didn't see. I know there's the Republican National Convention today, in which their former President Trump is nominating his official vice president, which should be Mr. Vance, if I'm not mistaken. And that's pretty much it after the hours today. So maybe the market's just reacting to that, a little bit bullishness. But in any case, Google looking very, very good, guys. Daily uptrend is healthy right now. Still looking for the daily higher low, anything pretty much above 182.66. Looking for the higher low for the eventual trend continuation. However, if Google is unable to continue and unfortunately loses this daily uptrend into a daily downtrend right here, is it that big of a deal? No, we're looking for the exact same trade as Amazon. Gorgeous weekly uptrend is Google right now, looking for maybe a retest of the prior all-time highs. That's going to be around the 180 level. Confluence with the 12 EMA on the weekly right there. So if we do consolidate a little bit more, right? If Google ends up having a little bit of daily consolidation like this, like Amazon, bringing us down into the 180 level, that's probably where I'm going to be taking this trade. Looking very, very good for a breakout, retest, and continuation of the weekly uptrend. No red flags at all. Moving into Meta right now. Meta down about 0.54%. Not the best past couple of days for Meta at all, right? So we will see if they can hold, trying to desperately hold, guys, these lows right here. They still haven't broken them, right? Holding on to them by pennies, and that is pretty much your 493.50. If ever we break 493.50 to the downside, guys, we have lost the daily uptrend, and it opens the doors for the bears to just continue this daily downtrend right there and maybe plunge us back into this big area of support for the bulls, which is going to be 481 down to 460. I've said many times on the channel in the past, if Facebook does revisit these locations right here, that's where I'm more interested in taking it for a little bit of a swing trade, as I do believe it represents tremendous opportunity for continuation of the eventual uptrend on the monthly, especially. The weekly is still looking good, even though we're kind of teetering with weekly levels right here, but this is really the larger area of support. So I wouldn't be too worried about Meta's performance right now. Obviously, the bulls have a chance of just reversing this, right, and getting the weekly uptrend back. Just be mindful of the overhead resistance that's been plaguing us now for a while. Tried to get through it once, couldn't do it, came back down. So keep an eye, guys. 516 to 530 is where the bulls really need to put in a lot of work to eventually blast through this. So I like Meta a lot right now. Just really sideways consolidation for Meta for a majority of the last month and a half of trading, right? Moving on to Microsoft right now. Microsoft also is slight consolidation mode right now. The daily uptrend is very, very healthy. However, look, daily higher lows are trying to be set anything pretty much above 446, looking for the daily higher low for some trend continuation. The only problem with this daily uptrend right now is the most recent leg, guys. The bears have taken back a lot. They've taken back over 78%. So in the event Microsoft cannot put in a new all-time high, puts in a lower high and lower low, sending us into the first daily downtrend we've seen since the month of April. Well, is that a big deal, guys? Not really. Why? Look at your higher time frames all the time, guys. When in doubt, zoom out, right? Weekly uptrend is gorgeous right now. Looking for the eventual weekly higher low, and anything pretty much in the 440 to 430 region, I'll be looking to play. Breakout, retest, and maybe continuation of this uptrend later on in the month of July after their earnings, or maybe into August, September as well. Looking very good, and the 12 weekly MA is right there on Microsoft. So even if we do get extended consolidation, I don't think it's a bad thing at all. Higher time frame bulls are in full control. Now, moving on to Netflix. Give me another quick second. Sorry about that, guys. Got a little bit of irritated throat right now. So in terms of Netflix, guys, up 1.37% to the day. Very, very nice price action by Netflix today. But unfortunately, guys, we can't really predict too much. Can't do too much technical analysis on this stock because they have earnings coming up in 3 days. Netflix moves 7-8% usually on average after earnings. So any technical analysis we can do can just be completely undone by earnings, right? 7% to the upside pretty much puts us at the all-time highs, and 7% to the downside pretty much puts us to the bottom end of this support zone. And in my humble opinion, this zone is going to be really, really, really the one to watch. We do have a decent amount of margin of error, but I'd like to see Netflix give us a little bit more margin of error before their earnings. because then we can really be able to absorb a 7% move. We have a lot of support down here on the weekly, which will be able to absorb that move as well, right? So now obviously the bears have regained short-term control. It was a daily uptrend, and now unfortunately we have lost it. Maybe they're looking to set up the lower high into lower low, but obviously guys, lower low continuation is predicated on them having, well, they're probably going to have good earnings, but it's in terms of Wall Street's reaction to those earnings. I'll remind you of what happened last time on Netflix, right? Netflix had amazing earnings. All their numbers were records. However, Wall Street wasn't happy because they said that they were going to stop reporting subscriber growth numbers in 2025. Obviously, that's Netflix telling Wall Street indirectly that their subscriber growth is no longer going to be a curve, an exponential curve like this. It's probably getting closer and closer to maturity, right? So it will be flattening out, even though they will be adding members. So they choose to just not report it anymore. Many other companies have done similar things in the past where where they've just stopped reporting metrics that they were previously reporting. Doesn't really change the business at all, in my humble opinion, but such things can happen, right? So if the bears really do take this one, keep a close eye on the bottom level of this. 605, 600 is going to be the area where I'm going to be looking to maybe make a play on this. If ever we dump back down here into earnings, that would be a loss of the weekly trend, unfortunately, guys, but in my opinion, still would represent a very good buying opportunity just because on the highest time frame, the monthly, look at this gorgeous monthly uptrend. Any pullback, in my opinion, just looking for that monthly higher low for furtherance of the monthly trend continuation. So looking very good on Netflix. We'll keep a close eye on this one as we get closer to earnings. And I will let you guys know the day before earnings, right? So on Wednesday, I'll be letting you guys know what strategy I'll be employing for Netflix for the very next day. All right. So hopefully that helps. Now, moving on to the next one on the list here, guys, which is NVIDIA. Can't forget about NVIDIA, of course, right? So moving on to NVIDIA. NVIDIA down about 0.62% today. Not the best day for NVIDIA, but definitely not the worst. They are still in a nice daily uptrend right now. Daily higher low is set right here at about 127.29. Got to be careful here, guys, right? Because if they do continue kind of like AMD, if they continue this hourly downtrend into tomorrow and lose this higher low right here, well, unfortunately, daily downtrend is underway for NVIDIA. They have not had an official daily downtrend since pretty much the month of April as well. So daily downtrend could be underway. Obviously, the bulls can just save this and continue the daily uptrend. But if we break these lows, daily downtrend is underway and just looking for a little bit more weekly consolidation, right? Maybe this is just the time for NVIDIA to consolidate at the top end of the range until their earnings come in August and until the CEO can confirm whether or not NVIDIA's growth is sustainable or not for the short, medium terms, which is everybody's focused on. Everybody knows that long term, they're going to be okay, but really people are focused about the short and medium term, right? So NVIDIA can just have a scenario where it just consolidates here over the next month of trading. I mean, it's done it several times in the past, right? Where it just consolidates for a couple of months and just cools off all the time frames, cools off the weekly time frame, right? Same situation as right here. Came into that location, hugely overbought, and just sideways consolidation. Did a great job cooling down the weekly. It was the same thing pretty much on the daily time frame, right? They were coming in this area, very hot RSI, and just sideways consolidation did wonders in bringing us down. So maybe a bit of the same thing happening on NVIDIA right now. I wouldn't be opposed to it. And obviously we know, guys, there's a very much larger section of support down here, 119 to 115. So I really see no red flags for the bulls right now. Just maybe looking for a little bit of a tightening range at the top end as NVIDIA kind of grows into its newfound valuation. I see no red flags immediately though. Moving on to Tesla right now. So Tesla with a little bit of consolidation today. I mean, it's up on the day, but look at this candle, right? It was up a lot more. As a matter of fact, Tesla today was up at a certain point, almost 7%, as a matter of fact, before giving it up, right? So unfortunately, they did lose the hourly time frame ever so slightly. So we will see if this hourly decline continues into tomorrow. Suffice to say, daily consolidation is underway, and we keep an eye here, 233.44. Why? Because Tesla was in a great daily uptrend. We were looking for the daily higher low for continuation, right? I'm not saying the bulls can't continue this to the upside. They can definitely recapture this to the upside, but if we break tomorrow's low, it's going to be tough for them to do it, and most likely we will continue daily consolidation. We have to keep an eye on the higher low right here, 233.44. Lose that, and you lose the daily uptrend, and already after, already, it's been 4 weeks of rally on Tesla, right? We may just see some weekly consolidation a bit further into this location. We had a nice first touch of this big support box, which is 238 down to roughly 226. But any further consolidation, guys, we may be looking to build a baseline of support down here. We have a good area of horizontal prior support, and we also have the downtrending channel line, the bottom of which is at the bottom of that zone too. So some good confluence in there. I see no red flags for Tesla immediately. It's run a ton, and now I will continue to play the short puts on it. Anything below 230, going to stay conservative just in the event we do tend to consolidate a little bit more coming into that earnings, which is pretty much in 2 weeks time. Moving on to Palantir now lastly. So Palantir up 2.14%. Palantir just on an absolute monster rally ever since the early part of the month of June. So looking very, very strong here, guys. And we're also closing above the $28 range, which I was saying the most important resistance area in pretty much Palantir's 2020 and 2021 chart history. So very, very nice that we're over and above that right now. Daily uptrend is obviously clear as day. Bulls in an absolute massive rally mode. So any move lower right now, going to be looking for a higher low, anything above 2690, looking for that higher low for further trend continuation. Looking very strong is Palantir. Now, in the event that we get rejected from this general $28 area, because it's not a static level, right, guys? It's a bit of a range. You can say it's roughly, 28 up to 29, include some of these wicks all the way up here. So in the event that we're not able to break above and we do have a little bit more consolidation, let's say we were to lose this daily time frame, maybe with overall tech consolidation through earnings season or something like that, well, I see no red flags. Daily downtrend could be underway, and then I'll be looking to go shopping down here for Palantir. Just gonna be looking up for a weekly higher low for further trend continuation. And this higher low would be very juicy, guys. Prior resistance, current support, and the 12 EMA is right there. That is 26.28 down about 25.20. Very nice area where I'm going to be looking to play Palantir in the near-term future to give the bulls a bit more momentum down here to really smash this area beautifully in the remainder of 2024. So that's pretty much everything I had for you guys today in terms of our earnings and daily market recap. Now let's take a quick look at my portfolio for a few trades that I made. All right, guys, so taking a look at the trades for today, to start it off, pretty much we closed about $250 in profit, which respects our daily minimums. I'm always looking to make between at least $200 to $400 per day, every single trading day. And suffice to say, we did close a couple of gains. Number one that is not here anymore, guys, is SoFi. So SoFi's had a tremendous rally. We had some covered calls leading into today. However, the share gain actually outpaced the covered call loss. So I was able to close SoFi today pretty much at $7.35. We had pretty much got assigned at $7, and after writing a bunch of premium, our average cost was down to about $6.60. Now, because I took a loss on the covered calls, my average cost went all the way back up to about $6.82, and then we closed them at $7.35. So about 50 cents on 1,000 shares. It was about $500 total profit, but we have been holding this one for a number of weeks, guys, pretty much since the early part of June after the assignment, right? So roughly about $100 per week. Not the best trade, but still a very decent trade. The only reason that I closed it here, guys, is because SoFi has their earnings in about 2 weeks time. And you can see here that I was assigned at the $7 puts. What I'll probably be looking to do is write the 7 puts into earnings again. And as you can see here for the week into earnings, well, I'm not too sure. I think it's the first week of August. So let me just pull up August. Yeah, as a matter of fact, it's right here. So you can see the $7 puts, right, paying 34 cents on the August the 2nd. So I might be opening some new SoFi short puts, just looking to swing trade this one as much as possible around $7 all the way up to $8, $7.50, $8, right? So that's for SoFi. I also closed a one SoFi leap call that I had. Same reason leading into earnings. If ever we get a little bit of a dip back here into the 7, I'll probably go again. I had 2 of these. So one of them was closed. We're already up pretty much. You can't see the percentage. Already up 22%. We literally opened these 3 trading days ago. So whenever I see 22% in 3 days, especially on calls with so much time on them, guys, I have to take them. So we closed one of those at about 365 for today. So very nice gain, guys. Not that big of a gain, right? Roughly about $70, but still fairly good in terms of ROI. Always look at ROI per day, guys. The dollar amount does not matter. If you're always focusing on ROI per day, your portfolio will go up. Now, moving into the rest of the trades, guys, you'll see that a lot of them are still the same trades that I had open. Now, a few of the ones that I want to touch upon, guys, I will give a big disclaimer, guys, right? So what I'm about to show you here are bull put credit spreads, but they're the most, well, not the most aggressive, guys. They are still very, very safe. However, it is quite dangerous, all right? So the reason is that, yes, our strikes are low. So you see here that I have Amazon bull put credit spreads here, the 182.5s to the 180s for this same week today. So I have 10 contracts of those. And because of commission, we did get 10 cents for them. But because of commission, obviously we're writing, 2 legs a pop times 10 contracts. That's 20 contracts, about $20 in commission. It takes away about 2 cents. So this is the amount that we stand to make by the end of the week, right? $80 for a total risk exposure of 10 times the width of the strikes, which is $2,500. So if Amazon, for some which reason, closes below 180 this week, which would be surprising. This is why I do these. They're aggressive because of the amount of loss that you can lose. But in terms of the price, the margin of error, they're actually quite good. For this one, for me to lose $2,500, guys, it would have to go down another 6.5%. So when I do these put credit spreads on a weekly basis, I'm only doing them on the most solid companies in the world, and I'm giving myself 2 times the expected move. Amazon usually only moves 3.5% per week. So whenever I see a day where Amazon, like today, this morning, was down 1.5%, that's when I run this strategy all the way down here. Big area of support. Obviously can go either way, but usually these guys are about 95+% win probabilities. And if you think $80 isn't a lot, once again, like I said, it's about ROI per day. So take a look. 80 divided by my max allocation right now, which is 2,500, is 3.2% per week. That is very, very good. But once again, guys, this is an all or nothing trade. This is why when I have a large account like I do now, I usually only run the wheel strategy, short puts, and that's it. Put credit spreads are very good if you have a small account, but they do have a certain degree of risk, especially if you want to grow your account quickly. So what I'm going to try to do for you guys in front of you guys right now is I'm going to kind of segregate between $5,000 to $10,000 of this account and try to run this very aggressive, even though it's not aggressive, you guys know what I mean by now, this more aggressive put credit spread strategy on a weekly basis. You'll still see the ones that I do on the monthly basis, like the ones down here where I try to get 1/3 of the width of the spread of a $5 spread and go 1 month out of time. But for the weekly ones, we're going to get a little bit more aggressive, and I'll show you guys how I built a lot of my trading account back in, when I started 2018, 2019, 2020, 2021, right? The more aggressive strategies. Yes, I am going to run more long calls and more long puts as well. So we're going to take roughly a $5,000, $10,000 portion of this account and go a little bit more aggressive with it, just for those of you that have smaller accounts that are willing to take on more risk to grow the account more quickly. I'll show you how one of the safer ways of doing it. But obviously when we have a small account, guys, we have to get risky. The only other way to grow a small account, guys, is just work a full-time job and put 10, 20% of your income in it every single month and just buy high quality companies, right? Or we can take our chances day trading call options and put options, but it requires a lot of screen time. This strategy is the best. If you don't have a lot of screen time because you work a full-time job, but you're still willing to take a bit more risk, you do a combo of put credit spreads and some 2-3 month out call options, right? So that's what we're going to be focusing on moving forward here. So that's the logic behind the Amazon one. And I also have another big one here, guys, on UNH. Now, this is probably the more risky one of them all. UNH right here, 472 versus 470 bull put credit spreads, right? So UNH, the expected move, they have earnings tomorrow morning. The expected move is about 4%, if I'm not mistaken. Let's just pull it up right here so you guys understand the logic behind this trade. So moving on to UNH, their expected move is down to about 4.96, 4.3 expected move. So 2 standard deviations would be about 8.5%, right? Which is literally where my short strike is pretty much, 472.50 into this massive area of support down here that I've highlighted on the screen, right? So that being said, this position is very risky. I don't want to have anybody in the comments say, yeah, but Will, you're risking $5,000 to only make a certain percentage, right? Yes, but they are, as I said, 95 to 97% probability win rates. And these are independent probabilities. Not just because you take 100 trades, you will lose 3. It's independent. It's just like a roulette wheel or flipping a coin. Just because it's been heads 10 times in a row doesn't mean that it has to be tails. Every single roll is independent, right? So the way I'm picking these is being very, very conservative, but it's a more risky strategy to begin with. We have 20 contracts. 20 times the width of the spread, which is 250, is $5,000 total risk. But how much premium do we get on these? We got about 15 cents. Now, without the commission, everything like that, it goes down to 13, but you guys get the point, right? So commission does erode these on the weeklies, but I'll show you how we can do these with a bit more time, 2-3 weeks, and get a lot more premium. But I'm just going to focus on weekly this week as we have a lot of earnings. So I'll be including a little bit of weeklies, maybe some buy and try weeklies as well. And obviously the longer ones, you'll see pretty much everything of the strategy that I'm going to throw at you, right? Just trying to farm put credit spread premiums depending on the stock and depending on the expected moves, right? That's how I'm going to choose them. So UNH, we got about 13 cents. So 13 times 20 is about 200 and let's do it right here, right? It's $260 right there. So if these expire above 472, we collect 260 bucks. 260 bucks divided by 5 grand is 5.2% per this whole week. If UNH pretty much tomorrow after their earnings, if they can just go down a little bit or stay flat or go up, these will pretty much be worthless. As of tomorrow morning, I'll probably be able to close them for 60, 70, 80% profit, right? So just bringing that forward. That's pretty much everything for the risky credit spreads, guys. As I said, I do not recommend anybody to do this if you cannot handle the risk, if you're not ready to lose the entire position, right? So there's a way to manage these with stop losses, but usually we do that when there's more time on these. When they're weeklies, you might as well just let them run. So we did the same thing on Microsoft right here. 10 contracts, 435 versus the 432s. Went very conservative on Microsoft as well. Take a look at this, right? 435 is all the way down here. It would need an extra, 4% drop this week from Microsoft, and for it to be below my long strike, almost 5%, right? So that's why I'm choosing that on Microsoft. Same logic applies, right? $2,500 worth of risk, and we're getting $80, about 3% ROI on that week, right? So looking fairly good on these. We'll see how those go. There are a couple other trades that I took in terms of earnings plays, right? So we did some Amazon 190 puts. Those are just straight short puts, part of the wheel strategy. I got $1 for them. Happy with that premium, but I wrote them a little bit early, guys. If I would have waited literally 15 more, I waited for these all morning. And when we came down into here, I was like, nice. We're approaching the low of the day. And then the very following 15 minutes, it just blasted through and came a lot lower. So unfortunately, guys, I waited, but I just didn't wait long enough. Still happy with the premium I got, happy with the level, and that's all that matters. We'll see what happens with this one. We have two Bank of America 39.5 short puts for the earnings. We only got 9 cents for them, guys. But as I said, with this, if Bank of America just comes down a little bit, flat or slightly up, we'll be able to collect all of this premium tomorrow and probably close these for a penny. Now, moving on, we also have CELH. CELH had a terrible day today, down 11%. So we wrote the 46 puts. I went with 2 weeks worth of time because I do think, guys, that we are going to get a bounce soon on CLH. In my opinion, this move is starting to get a little bit overdone. Big support down here in the lower $50 range, and I'm at 46 for the next 2 weeks. So any little bounce will pull a lot of premium out of this contract. I'll probably be able to close it the next couple of days if we get a bounce at a significant profit. And then we did write also some Chewy 24.5s, small trade, just looking for some momentum continuation, 12 cents, 0.5% for those, just some very, very small short put contracts. Everything else, guys, didn't change. I just went with some Enphase. I went with some Enphase 104 puts, 47 cents, not quite 0.5%, but I'm staying relatively conservative on Enphase just because it does move so much, right? I mean, it was down 5.26% today, but I didn't get the low of the day at all. I kind of waited for it to see if it would recover and kind of took it at the midpoint of the day right about here. So that's why I didn't get the best premium, just maybe looking for a little bit of daily high or low into daily continuation. That's why I went a little bit conservative with the 104s down here. And in the event it doesn't come back at all and just bounces from here, well, I went with some more aggressive 125 calls. We paid 61 cents. 2 call options for those, so we'll see how those goes as well. Everything else is pretty much the same, guys, still in place. Couple Charles Schwab short puts for earnings, right? 69s and the 70s. The expected move on Charles Schwab for the week, let me just get it for you guys, right? Expected move for Charles Schwab for the week is 71.88, 4.3%. So I did go a little bit more aggressive with this one on Charles Schwab just because the strikes under this didn't pay anything. $70 is pretty much the last line of defense right here. I think Charles Schwab should have a decent quarter, but if in the event that they don't, guys, big level of support down there where my strikes are, $70, $69. So we'll see how those go. And I think I even have one more put credit spread on Schwab. Yes, I do. Just 170 versus the 67.5s for 13 cents right there, right? So we're risking 250 bucks for 13 cents. So 13 divided by 250, 5.2% for the week. So we'll see how those goes as well. Everything else is pretty much the same, guys. Nothing else has changed. I just figured I should take a little bit more time to explain the put credit spreads because you guys haven't seen the more aggressive ones, right, that I've been running just as of this week, as I was kind of hinting at yesterday that I would try to do for you guys, just trying to do it, just bring myself back to when I had a small account, because I do relate to all you guys who tell me in the comments section that it's not easy when you have a small account, and I completely agree. You have to take on a bit more risk, especially if you don't have the income to keep putting into your portfolio and just building it organically that way. If you want to trade it up and don't have that much time, this is a really good way to do it, but it does definitely have its risk risk involved, of course. Now, moving on here, guys, right? So the ones that I'm going to play in terms of tomorrow, guys, not financial advice, of course, but tomorrow after so I have all the ones that I'm willing to play prior to the morning. Now, in terms of after hours, guys, I'm probably going to be playing Interactive Brokers after the close tomorrow, and maybe JB Hunt. I'm not yet convinced I'm going to play this one, but Interactive Brokers definitely. And then Wednesday, since I'll only talk to you guys after the close tomorrow, Wednesday morning, I will be playing ASML. ASML, I'll probably be playing put credit spreads just because writing a short put on ASML is way too crazy, right? So ASML, the location that I want, we go 2 times the standard deviation. If I can find some premium down here, guys, in the high 900s, think 970, 960, that's where I'm going to be shopping for my put credit spreads, looking for some decent premium on those. If I can find, 2-3% for the week, I'll be happy with those as well. And pretty much I think that's going to be it, guys. Johnson & Johnson, I will probably be playing as well. And maybe Ally Financial, I'll be looking to play as well. Those 3 are probably the only 3 that I'm going to be playing into the Wednesday morning session before the open. Johnson & Johnson, probably just straight short puts, to be honest with you guys. I'm going to be watching the expected move, but if I can find something down here in the lower 140s, 140, 141 maybe on Johnson & Johnson. Haven't checked the expected move, but I told you guys the strategy, right? Just go for 2 times the expected move. So whatever this dollar amount says on this screen right here, let me just pull it up. Sorry, I don't want to spend too much time on this. I know the video is getting a bit long. Spend a bit more time on the trading section here. So Johnson & Johnson, right? Expected move, 2.2%, 146. That's about $3. So if we go $3 lower than that, it's about 143. So yeah, I'll probably be looking. We'll see what happens tomorrow in trading session, of course, but probably around the 143. If I can find a nice premium on the 143s, probably be going for that. As a matter of fact, let's check it right now. See if Johnson & Johnson moves. I'll just show you guys how I do this real quick. That way you guys can replicate in the event that you want to try your hand at it, right? This earnings strategy, very, very risky, however. 143s for 18 cents. I'd probably do it. Just because we're going to be in the trade for only, a couple minutes pretty much and closing it at the open. I know it's not that much premium, guys, but we're only going to be in this for 1 day, right? If we were to take this premium for 5 days basis, that would be $90 and it would be 0.5%, right? We'd be looking to get over 70 cents for a full week. We're getting 18 cents for 1 day. 1 times 5 would be 90. So we know our annualized and our daily ROI per day is good even at 18 cents. So I'd probably be willing to take that one. Obviously, if Johnson & Johnson drops a bit more tomorrow, then we just go 1 strike lower, right? So that's pretty much everything for today. Hope you guys enjoyed that. Hopefully you guys enjoyed the longer portion that I spent explaining the trades that I'm going through, explaining the earnings process as well. I'll take you guys through this as much as I can. And, hopefully we can make some decent gains. Pretty sure we will be able to. So take care, guys. That's pretty much all I had for you guys today. If you enjoyed it, consider liking the video for the growth of the channel. Would really appreciate it. Consider subscribing to the channel if you're new as well. Would love to see you back here. We do these videos every Monday to Friday. So hope to see you in another one soon. And lastly, if you have any questions at all, especially guys on the trading portion of the video, feel free to leave your comments down below. Trust me, guys, there's so many different strategies that I can show you guys, right? We can do the iron condors. We can do the 1-1-2 strategy on SPY or on the ES. We can do, straddles as well, right? We can sell straddles if you want to as well, or strangles rather as well. There's so many things that we can do, but I'm trying to keep it as simple as possible for people that have relatively smaller accounts, but that still want to trade a little bit more frequently on an intra-week basis, right? Because it's very, very easy to farm premium with some of the larger strategies, but we have to go 30, 45 days out, which means you only really get about like 12, 14, 15 trades per year. And yes, the ROI can be good, but we want to compound more, especially when we have a smaller account, right? There's risks involved. That's just the nature of having a small account and wanting to grow it a little bit quicker than otherwise we would be able to, right? So take care, guys. I'll see you tomorrow after the close, and peace.